the first part will be a masterclass of 10 minutes. The second part will be 2 investment pitches by different JFN members talking about investments they're invested in that they're particularly excited about and that they would encourage other JFN members to check out for potential investment. So we have an exciting agenda tonight. We have, for our masterclass, Cintra Pollack is the Director of Race Street Management in Denver, and will be doing a masterclass for us on re-energizing our institutions, sustaining Jewish life through infrastructure. And Cintra, I love that we're talking about this live. This is an idea, you know, that you shared with me years ago. And this is an incredible group to sort of see if we can bring it and spark some energy around it and bring it to, the energy's not a pun, it's on solar. And see if we can spark some interest in sort of taking that, because the whole idea of this, this get together is to be sharing ideas to actually spark real action and collaboration is what we're looking to see. I want to say hello and thank you to Doug Batanti-Stewart, Fisher Foundation, and chair of the JFM board, who's been a fantastic supporter of impact investing throughout and has helped put together this circle together with Tamar, who's been a rock star. Thank you.
You just promoted me,
we'll also,
I'm not the chair of the board of JFN, but chair of the Impact Investing Committee. I don't think I'll ever hit that level, but thank you.
Doug, you're the chair to me. You're something. You're the treasurer. You have an official title.
I'm on the executive committee, but chair of the Impact Investing Committee. Sorry, just don't.
Okay, perfect.
Yeah.
Thank you. I appreciate that. I appreciate that. We'll also hear from Josh Tanenbaum, founding partner of Clearstone Enterprises in New York. Josh has been a longtime JFN member and a very active impact investor. So he'll be sharing a deal in C-Note. And last but very much not least, Elli Booch, Director of Philanthropy from the Edmond de Rothschild Foundation here in Tel Aviv. And Edmond de Rothschild Foundation, Elli will tell you a little bit more, but for those of you who don't know, has been a really incredible supporter of the impact investing ecosystem here in Israel and beyond. So we're really excited to be able to hear from them. Elli has also just started a matching grant through JFN. This is the second in a series. So Elli, would you mind sharing a bit about the new matching grant initiative? Because I think it's something that's relevant and of interest for everyone on the call.
Sure. Okay. Hello, everyone. It's great to see many familiar faces and good to be here. So I'll take like 3-4 minutes to share with you our new matching grant, which we're actually launching next week. So wait a minute. Let's see how this works out. Okay. So basically, we've been involved. Our foundation deals with helping to create an inclusive society in Israel and working on leadership and diversity and excellence through higher education. And for many years, we've been doing that and always looking into kind of innovative and new ways of bringing new money into tackling social issues. And I think that's how we came to the field of impact several years ago, and kind of took on a mission within the foundation to help build the ecosystem of impact investing in Israel. And that's what we've been doing for several years now. What we see, and there's many stakeholders and players in this ecosystem, our role, we think philanthropy's role is to help create infrastructure, to build this ecosystem. And that's how we came to do with JFN, the first matching grant on impact investing. The idea, impact entrepreneurship, is to help create an infrastructure in this field. We did this 2 years ago. There was a big buzz around it, close to 40 organizations, over $6 million requested, and eventually 12 organizations which were chosen with $2 million. You can see some of the organizations, some of you are familiar, know some of these organizations, but what you could see is that it has to do with ideation, incubation, acceleration, pilot funds, research and development tools, and creating and scaling existing models. because there was such a huge interest, we decided 2 years down the road, and we're already seeing many results of this matching grant, to go and to launch now, next week, a second matching grant, which is going to be very similar. We want to do more of a focus on the role of higher education and higher academic institutions in this. So that's going to be a specific focus, but other than that, it's very similar to the first matching grant. And next week, 27th of July, we're doing a meeting for donors who are interested, where we could dive deeper into this. I'll say just one sentence. I think this whole crisis that we're in, we know almost nothing about what the world's going to look like in a year and 2 years' time. What we know for sure is that there is going to be more need and less money. Less money in philanthropy, less money by government. And I think it makes sense that there's going to be more interest in impact investing as a new way of bringing new money in to tackle social issues. And in that respect, I think everything that we're all doing is going to be even more relevant post COVID-19 than it was before. So I'm inviting you guys to join, and hope to see you on Monday. Thanks. Stop share. There we go.
Thanks so much, Elli.
And I just want to add one thing. I'll put in the chat the way to register for Monday's program so that you can easily register and get all the Zoom information, and here to answer any other questions about that if you have any issues.
Great. And with that, Cintra, you're up. Can you give people a bit of a brief overview of your very long list of sort of commitments in the Jewish community? In the thought that other people would be interested and curious and may want to collaborate on additional projects.
Sure, I am. Well, I'm currently the campaign chair, development chair for Jewish Colorado, which is the Colorado Federation. I am now on the board of JFN. That's a new thing. Have not met a lot of you. And I run a family foundation, which you'll hear a little bit about. And I'm on the board of trustees of Davidson College, which isn't Jewish at all. But if you have a kid who wants to go to college, I'm the person to talk to if they want to go to Davidson. I don't know what else, Vanessa. I think that's sort of what
perfect.
I do.
That's wonderful.
Okay.
Thank you.
And I have given Tamar my presentation, and she's going to share her screen. I tried to do this so that I could do it in 10 minutes. I'm kind of wordy, and so I'm going to be looking at my own screen, except now. Okay. Because I've got a lot of notes, and I'm trying to make this so I can do it in time. All right. I believe that you are looking at the title page of my presentation, and it says re-energizing our institutions, sustaining Jewish life through infrastructure investment. Let me just apologize in advance that this is very US centric. I don't really know about the dynamics of my investments, what they would look like if you were trying to do it in Israel. I'm sure that there are analogous things you could do. And also I wrote this presentation a little bit for a novice audience, but maybe something that you guys aren't doing, even if you're very familiar with impact investments. You might not be investing your corpuses of your foundations or your donor advised funds into impact investments. So we'll start from there, and I will say that I'm Cintra Pollack, and I run a single family office and a family foundation. I simultaneously manage the corpus of that foundation, and I also manage the grant making process. So before I try to woo you with the wonders of impact investing, I'm going to admit that I'm pretty cynical. I have some fundamental issues with the term impact investing, and I have found that more often than not, impact investments that are offered to the non-billionaire set are often marketing ploys, or they're ways for middlemen to insert additional fee layers into what otherwise is a pretty simple and common sense investment. Don't even get me started when you have all the people that want to offer you ways to invest with Jewish values, because I don't know what that means. But I will say that I have long strived to not invest in evil, in things that I think are destructive, overly extractive, or unjust. But I can't tell you that everything that I invest our foundation corpus in is 100% reflective of our values. It's a tough thing to do. The world is nuanced, and almost any investment has trade-offs and unintended consequences. I just try to understand them going in. You don't have to make multi-million-dollar investments in fledgling B Corps to make the corpus of your foundation or your DAF work harder to do more good than you do with your philanthropy alone. As complicated as the world is, you have the ability to pick investments, projects, and industries you think are net positive for the world. And more good is more good, even if it's not 100% directed towards your theory of change. I'm happy to not leave 95 cents of the dollar on the table every year when I think about the good I want to do. So next slide, where we started. A little bit about the Singer Family Foundation, which is my foundation. We are not a foundation dedicated to reversing climate change. We typically make a lot of grants to safety net social service programs, grants to increase accessibility of arts and culture, and grants to facilitate engagement in Jewish life. Generally, we don't invest foundation money in private equity or venture capital type investments, nor do we expect venture level returns, because I feel like our corpus is not big enough to withstand the illiquidity or high concentrations of risk in those sorts of funds. Also, my main client happens to be my mom, and she built most of this wealth herself. I don't know how many of you guys have Jewish mothers, but I don't want to ever walk into her home or office and tell her that I lost the money that she put aside to house widows or to feed orphans. There's a place for really risky, bold, venture type impact investments. It's just that for the work that I'm trying to do, that's not going to be done with the corpus of our foundation right now. Next slide. So what has brought me to infrastructure type investments, in particular solar, which I'm going to be talking about, was a desire to build a portfolio of predictable longer term cash flows, not fully correlated with publicly traded stocks or bonds. Don't get me wrong, we care about climate change, but that's not the main reason we invest in solar, actually. A little bit about my background. I actually built a solar business plan when I was in grad school before it was popular. And I was an analyst for a hedge fund, and I covered some of the solar stocks and some of the equipment makers. But I am neither an engineer nor am I a solar expert. I don't have to be. All I have to understand is that something like solar energy is not really a technological risk. Solar panels have been on the roofs of places for about as long as I've been on this planet. It's a financing risk, but it's measurable, it's predictable, and as long as you don't lever up, you know, you can basically predict your cash flows for 20 or 25 years, depending on how you structure a deal. Once a system is designed and installed and paid for, which is why a lot of people don't put solar on their own roofs, it's pretty much guaranteed to produce electricity for 20 plus years as long as you maintain it. I do have to assume that every day the sun will rise. And while past performance is no indicator of future returns, I figure that if tomorrow the sun doesn't rise, I have bigger issues to worry about than my foundation corpus. Next slide, please. So here's a table of some of the things that we've done with our corpus. Many of these investments can be made with as little as $25,000, and investments in Wonder, which is one of the companies that I work with, can be started, I think, with $2,000 online. They might have changed their policies, but when we invested, that's where they started. We started with Wonder, and we moved on to buying a bond from a company building solar in South America called Faro. Then I found a company called Sunwealth, which I'll spend a lot of this presentation talking about. We also have a muni bond on here that we bought on the open market that installs solar at a landfill site, and that's on here, but that was a small investment. As you can see, if you blend sort of our weighted average of our investments, we're actually making a 7.7% return. And it's really hard to aggregate the impact that we've made because everybody presents it to us in different ways, but I tried to show you the megawatt hours that we've created so far with our investments. So 604, if you add it all up, could roughly power 750 homes for a year. And when you're talking about reducing CO2, the tons of CO2 that have not been released into the atmosphere is equivalent to about what you would release into the atmosphere if you burned over 200,000 gallons of gas. So next slide, please. I'm not trying to pitch a specific investment or company, but when I found SunWealth, I found the kind of company that I really want to work with again and again. And I found them because there's a woman who I'd served on a board with in Boston more than a decade ago. I was on LinkedIn and she's connected to me, and I saw that she'd changed jobs. And when I realized what she did, I emailed her and I said, Jess, I think you might be doing stuff I care about. And she showed me what she's doing, and I do, and it's a perfect match. So SunWealth is a solar company that they're really working to broaden the types of businesses that have access to solar for their businesses. They essentially create systems, they build systems, and they own them, and they sell the electricity to their clients with power purchase agreements for a long term. And part of their mandate is they want to make solar available to nonprofits and to houses of worship and to other kinds of organizations that might not otherwise have the ability to just put solar on their roofs, even if they're commercial, and they take out loans from somebody like a Wonder. Because some of the smaller buildings that they're dealing with, or quirkier buildings, are not as profitable. So they blend the less profitable projects in with more profitable projects. They sell the debt or the bond to me, and you can see some of the investments that I have made with SunWealth. They actually created this slide for me to tell me what I've done. And the first two are actually in my in the foundation corpus. The third one is a tax equity structure, which only makes sense if you're using money from a taxable entity. So I'm personally invested in that, and so is my operating sort of management company. But I think that it's pretty cool that they gave me this slide so that I can understand the impact I've made in all the ways they measure it, not just megawatts, but in lifetime job years, or in how much money is being saved. And so far, what I've invested with for them has saved $13 million in lifetime energy savings for those projects. So I think that that's pretty exciting. Next slide. So what comes next? I mean, the things I like about solar investments aren't unique to solar. There's lots of sorts of infrastructure plays like this that you can do. They're really boring investments, and I love boring. I mean, I'm really just trying to make enough money to not touch the principal of my corpus. And so I target a blended 5% real return. And when you account for the high allocation of cash I hold in my foundation, which I do just in case, say, we have a global pandemic and I want to give a lot more money away for a year or two. This is sort of where we come out. You might look at risk differently, but that's how I like to do it. I like to live to give another day. So next, please. These are a couple of the other infrastructure types of investments that we've made. I don't intend to explain all of these now, but if you're curious about any of them, just contact me. Generally, these opportunities come with longer lockups, higher credit risk, or a higher minimum investment than the solar investments I've mentioned. So next, what might we be able to do if we collectively made these types of infrastructure investments in our own communal buildings? I'm turning to us, the Jewish Funders Network. I just walked through some of the many things that my foundation has invested in and things that we think are good for the world. But as I started this conversation, I mentioned that our foundation typically funds a lot of Jewish nonprofits and projects. So where in this is anything Jewish? The truth is that I barely have any of these boring state infrastructure plays that I can make in the Jewish world. Making Jewish impact can't only be something that we can do by investing in Israel. And investing with Jewish values can't be the only thing that we do, because your value and the impact you want to make might be my boycott, even though we're both Jewish, because we each interpret those values differently. So it's a hard thing to do together. But if you think about lowering the electricity expenses for 10 to 20% for 20 plus years for our Jewish institutions, those are real savings that can go to improve the paltry salaries we pay or increase programming budgets without having to fundraise a dime, and all while reducing our carbon footprint as just a nice thing that we get to do on the side. So I can't see any of you, but I was going to ask you to raise your hand if any of that offends your Jewish values. I'm guessing it's probably not going to be too offensive to many of you. And we have, next slide, all sorts of buildings we can do this on. We've got day schools and synagogues, community centers, senior homes, federation buildings, food pantries. even if you limit yourself to states with a lot of sunshine, you don't have to make this work, or states that are favorable to offering solar rebates and incentives, also not necessary as they once were. The potential for investment is huge. Take a day school, or all the day schools, for example. Do you know what the highest budget expense for a school is? It's salaries. But the next in line is their electricity bill. So if you want to save your day schools, you can start by saving them 10 to 20% a year on their second highest expense. So that's about it for my presentation, other than to say I've added an appendix. When I invested in Sunwealth, a lot of their projects do happen to be houses of worship. So they've given me slides on different synagogues that my money has helped to put solar on. And I'm just going to run through those a little so you can just see that they're all different sizes and they all do different things with the money that they save. These all happen to be in Massachusetts. So next slide. Congregation Eitz Chaim is in Cambridge, Mass. They are probably going to save $22,000 over the lifetime of this project for their power purchasers. That's 255 metric tons of carbon. I mean, that's kind of exciting, but if you go to the next one, this is a bigger installation, and they're actually using the money to help with their tuition-free private school for low-income girls. So they're choosing to use their money a different way. Next slide. You've got Temple Beth Zion in Brookline. Not a huge installation, but they're still saving $23,000. The next slide, Congregation Beth Elohim actually built a huge solar installation over their parking structure, and they're using their savings. They're actually selling less expensive electricity to their community. I think I've got one more, but then I want to give you guys time for questions. Temple Emunah is the last slide, and they're actually saving $491,000 estimated in lifetime expense that they can use for anything else they want to do at their synagogue. So that's it. I probably talked really fast.
No, that's great. That's great.
Well, I'm open to questions.
Perfect. We have about 6-7 minutes for questions, and I'm going to be selfish and take the first one because I think what you're proposing is so novel and so exciting in that most of us are Jewish impact investors, and yet beyond, applying our values, as you said, to our secular investments or investing in Israel, which for some people think of as a Jewish investment, there are so few ways that we can actually move resources and save money within the Jewish community itself, particularly like looking at a North America model. So Cintra, if you were like brainstorming vision, thinking big, what could we as a group of funders, philanthropists, investors come together and do to make a significant change as a group? Not to put you on the spot.
Well, no, there's so many really boring investments that aren't boring to me. I mean, if you're saving just a few percentage points a year for some of the expenses for these organizations, over 10 or 20 years, that's real money. And I love compounding, and I'm a dork. So those kinds of things thrill me. So saving 10 to 20% off of electricity, that's exciting. Or, the upfront cost of fixing all of the windows and the HVAC systems and the lighting, that some places might not have money to do upfront because they don't even have enough money to run their own organizations, particularly now. But if you can give them money to do that and have them run their infrastructure as sort of their HVAC as a service, companies are doing that. That's better for them. We could have low cost pools of capital for all of the bridge loans that organizations need when they do capital plans. And right now they're borrowing from banks. We could actually offer it to them with less prohibitive terms. I mean, there's lots of really little small things that in aggregate across the country or maybe across the world, if we did them together, we're sort of saving and shaving enough of the money that is required off while still getting a return. And worst case scenario, if something falls through, we have the ability to make these things grants for things that we care about.
For sure. I think every small step is, a big move towards a brighter future, and to be able to free up resources that are needed for philanthropy is really fantastic.
I mean, let me just add, I think that there are a lot of places where we could invest. I don't think that money should ever be given to something that's investable. There's a lot of problems in this world that you can only solve by paying the money and giving it away. And that's it. And that's all you really can do to solve that problem. But if there's anything that we could do this sort of investment in, it's just a much more efficient way to solve the problems in the world we need to solve.
100%, 100%. Ram, did you have some questions?
Just a technical question. You had one of the investments was 5% return or 6% return over 5 years. Just wondering, is that over the whole 5 years or yearly return?
Each year. Those are all
Each year.
annual.
Did
And
anyone
they're
else
pretty
have
much set.
questions?
They're like bonds. And so I don't expect those to fluctuate. I'm never going to outpace my expectations with the investments I just showed you in financial returns. Now, possibly in impact returns, they could wildly blow me away, but financially, they're pretty much set, and that's all it's ever going to be. Best case scenario. And they could default, so that's worst case scenario.
Doug, did you have a question?
I did. Yeah, I was curious, Cintra, the amount of money that you have in those 6 original funds, just curious about the size of assets we're talking about and how that relates to your overall asset size.
So it's a little bit hard for me to say in that I actually created a fund that other aspects of the family office are invested in, that half of that fund is the Singer Family Foundation. But it's not, I'll just say that it's hard for me to say. The example with what I've done from SunWealth is, I think that was $850,000. But we have a lot of investments in things that aren't these impact investments. There are other real estate investments, also things that I don't think are evil, but I would never call them impact investments because I haven't had the chance to deploy this much. But if I had to think about it, I mean, it might be a few $1 million at this point.
Okay. And I hope over time you'll be able to share some of the due diligence, because I would love to hear more. We don't have to do it now. I know we don't have.
I already talked too fast.
Well, no. But to hear about the social impact bond, for example, with water in Atlanta, again, I know we don't have time right now. I'm just
happy to talk to you about it.
That's great. Thank you.
We'll move on to Josh and a presentation on C-Note. Josh, please do us the favor also quickly of telling us the many organizations that you're involved with so people can connect the dots.
Sure. Thanks, Vanessa. I have no idea how I'm supposed to follow Cintra, but I'm going to do my best to hang in there. Just by way of quick background, philanthropically, I'm a trustee for the Pollack Foundation, as well as the chairman of the America Israel Cultural Foundation and the vice chair of the Council of Young Jewish Presidents. That's the Jewish world. Professionally, just to give you a sense where I come from in this presentation, I started as a tech entrepreneur, an accidental social entrepreneur. After we had exited, I actually went over to Korn Ferry as part of the asset management practice, co-founded the impact investing practice there, and then the mergers and acquisition practice for the firm. Went on to Citi and their investment bank and the financial institutions group. And I am the founding partner of Clearstone, which is a collaborative venture fund that focuses on reducing the frictions that low and middle income populations face in their strive to achieve upward mobility. And C-Note was one of those investments. And Wonder, which Cintra actually alluded to, is actually a competitor of C-Note. So I look forward to comparing the two toward the end. My task here, as Vanessa reached out, was basically to take the seat of the entrepreneur and almost pitch the company in a very short period of time. But happy to talk more about how we thought about the diligence, how we thought about the impact, how we thought about the returns, et cetera, et cetera. But here's C-Note. C-Note is basically funding the most effective and yet underfunded financiers addressing the most underserved communities in the United States. And they do it with this exclusive focus around fixed income. Now, what does the fixed income market look like? There's $40 trillion in assets out there. The social responsibility investing market, which is inclusive of impact investing and ESG risk integrated assets at the time of the raise, was 12 trillion. And when we think about the impact investing product set, what's available through our wealth management shops, what's available off the shelf if on the alt side or even the traditional fixed income side. And the reality is there's just a dearth of impact investment product that is market rate on the fixed income side. So here's how CNote looks at this opportunity. They broke out 3 of the main pillars of where fixed income impact products could be created. And it's a $500 billion opportunity, namely around financing education, green bonds, and where they've started their beachhead, community development financial institutions. CDFIs are largely funded by the CDFI fund, which is a treasury function. And if you are not one of the top 10 CDFIs, and there are 900 across the country, you really don't get any assets from that fund. It's embarrassing. And when the first wave of COVID response funding came out, if you weren't in those top 10, you really didn't get much financing, and you got a little bit in the second wave of financing. So what CNote has done for CDFIs is connect the institutional capital markets and originally the retail capital markets with these CDFIs, financing the most at-risk and underserved populations in our country. So what does that mean? They basically created a technology where CDFIs, who usually don't have access to external financing, can plug into a marketplace to access institutional capital. What does that look like from a full transaction perspective? So let's say I am wealth manager A. I've got a bunch of clients that are trying to do a lot of good with their assets. I plug into CNote's marketplace, and what they do is they issue. So basically what they've done is they've digitized the issuing and underwriting side of a loan to lend money to a community development financial institution. They're lending to their balance sheet, and that increases their capacity to lend more money to various causes, whether it's climate change, whether it's small business lending with a particular focus of people of color, financial literacy, whatever it might be. And the payments from those end users, those borrowers, gets paid back to the CDFIs and piped back to the original investors. And they do it in a really impressive way. There's off-the-shelf products, and then there is custom products. So on the off-the-shelf side, let's start on the far left here. This is their cash solutions business. Traditionally in the market of
Josh,
cash—
1 second. We're still on the first slide, so catch us up.
So quick overview slides on the marketplace, quick high level on CNote. This is the transaction supply chain that we mapped out. And now we're talking about the product sets. Okay, so there's off-the-shelf products. In the cash management solutions world, the average product returns 1.04%. These are meant to be super safe, money market-like products where you can actually have really safe but kind of growing with inflation returns, so to speak. This cash management solution returns 2.75%. They also have 2 short-term note products that return between 4 and 6%. One fund focuses on financing women to empower themselves to grow their businesses and finance other types of projects. The other is focused on broader people of color communities. So no specific segment, but so long as they are a diverse owner, really looking at the most at-risk and underserved populations and delivering. The only non-market rate return product CNote has was in response to COVID, which is a long-term capital product called the Rapid Response Fund. It returns 1% per annum. And that was really just to give CDFIs the ability to keep all these small businesses afloat in a time where, quite frankly, it's virtually impossible to. Now, the custom product. If, let's say you have a personal passion and you are trying to address racial equity, you can say, I want to address racial equity exclusively in Arkansas, and they will issue and underwrite a note, a loan that will go to the CDFI, and then you will have an impact report, a tear sheet that says, this is the impact you can expect with your money, and this is the return you can expect for your money. Now, what's the economics here? So it's a 2-sided marketplace, basically. They charge $2,000 to the CDFIs that don't have access to external capital to basically have a vehicle to take capital. And then on the institutional investor side, they charge 25 bips per loan, or 25 bips of the value of the loan. And then if you're doing a custom mandate, an additional 50 to 75 bips. And here's the impressive revenue traction they've had to date. So they were founded in 2016, 2018, they had about $260,000 in revenue, year-over-year growth to 2019 of 96%, and then year-over-year growth beyond that of 225% estimated for end of this year. A bit about the company: 0 losses to date. Find me a lender that has 0 losses to date. And it's a woman-led firm. They've raised about 50 million in assets, so they're well on their way. They have a lot of really impressive partnerships, and they've been well recognized in the field. And this is why. They've got a great team. So Kat Berman, who was an MD at Schwab in their innovation department, helping them think through the next generation of finance, was a serial entrepreneur before that. Her co-founder, Yulia Torozava, she was at AMG, where she was doing risk assessment on their fixed income and public market products more broadly. And then their CTO, who also just had his own sale, leading the technical diligence in that sale of a fintech firm of his own. And he was formerly a senior leader at Visa. So I mentioned Wonder, well, actually Cintra mentioned Wonder, and this is the comparison against Wonder and other competitors. So C-Note's the only one to have market rate returns. It's scalable, it's customizable, and you really get deep insights into the impact you're having with your capital. And lastly, this was the raise. Now, this deal was picked largely for educational purposes, so there's not much of this raise actually left, I'm afraid. But they're toward the tail end of raising this seed round. Is a $3 million raise led by Manchester Story, a really respectable fintech firm. They're putting $2 million of their own capital. It's a priced equity round with a $15 million post-money valuation. And the uses of those proceeds will be to get to $3 million in ARR, so sticky revenue year over year, and by bolstering their sales and marketing, further investing in the underwriting technology, and expanding to other impact areas, like we alluded to, educational or green bond investments. So that's C-Note in a nutshell. I hope I did them. I hope I did well by Kat stepping in as like a pseudo founder. But this is the investment in C-Note. Any questions?
Thank you, Josh. As one point of clarification, so there are opportunities obviously to invest directly in their products, and then this was an opportunity to invest in the operating company. Is that right?
Exactly. So what I didn't mention in the introduction is Clearstone invests in technology companies as well as asset managers that play in our space. This is quasi both, because they're technology for CDFIs, and they're also an asset management product to other institutions and retail consumers. So in that sense, this was very much both a play for us, but we are playing at the general partnership level, not the product level.
Other questions? Michael?
Hi, Josh. Thank you for that. Just a quick question. You were showing, and if you could share the slides with us, that would be great. But you were showing on there essentially low single-digit kind of expected return, and you were throwing it against Wondra, which I don't know anything about either one going into this, but Cintra was showing with them some high single-digit kind of returns. So I'm just wondering what's driving the difference, knowing nothing about either one.
Yeah, so I don't know SumWealth intimately, so I can kick that over to Cintra, but my guess is one is actually benchmark against project finance in the energy space. This is focused on basically less risky fixed income products in the short duration space in the cash management solutions world. Cintra, would you say that's accurate?
I think that that's probably accurate in some ways. And then also like Wonder, for example, they're providing solar financing to any type of corporation, doctors, offices, whatever, people that might not have problems getting access to banking, but they might not be able to get solar financing in the same way that Wonder's offering it. But if you look at the horizon of that investment, my investments are 5 or 7 year investments. And then on C-Note, which I actually am familiar with and I like them, but C-Note is offering like basically a fully liquid bank deposit-like fund. And so it's a much lower return, but it's also much more liquid. The COVID fund is different because of what they're trying to do. So it's not a high return and it's not that liquid, but that's a big difference, I think.
Definitely. Yeah. And that cash solutions product is what Cintra is referring to, and that outperforms the market by about 1.5%.
Great. We have one last question from Beth Cyril.
Hi. I mean, I run a community foundation, and so liquidity is a big issue for us. And we're actually looking at C-Note, and you had some on the slide, but I just wondered if you could talk a little bit about the liquidity issues in the C-Note products.
When you say liquidity issues, you mean what's the timetable for you to be able to?
Yeah, because like we process grants every week, and so sometimes we have to raise capital. You know, as a community foundation, it's different than a private foundation because we manage donor advised funds, and so if we have a run on grants, like, you know, we just have to make sure we have access to adequate cash.
Totally. I don't think that's a problem here, in the sense that their cash management solution, I think, is like a 30-month lockup. Or a 30-month term with 90-day liquidity. And the Wisdom Fund and the Promise Account, I think, have a little bit longer liquidity lockups, but they're 60-month and 90-day liquidities, respectively.
Okay, thanks.
Yeah.
Great. And with that, we will move on to Elli and hear about a recent investment from Edmond de Rothschild Foundation.
Okay, hello again, everyone. I'll quickly focus on our social impact bond, the first social impact bond in Israel on reducing dropout rates for higher education. So I mentioned earlier, our foundation focuses philanthropy-wise on higher education, and throughout the years we had many initiatives that had to do with reducing dropout rates in higher education. In Israel, dropout rates are around 30%, which are very high. A lot of money being lost on the government level as well, students losing money, etc. And we've been investing in different models throughout the years. And way back, I think in 2012, when I first heard Sir Ronald Cohen speaking about the first social impact bond of prisoners' rehabilitation, I thought, this same concept can work with students and with dropouts, and we're losing a lot of money there, and we can get money that is not philanthropy. So originally we did something very primitive, but then when social finance Israel came along, we went into to actually build a social impact bond. So the way basically it works is, this is what we all know about maybe social impact bonds, and we're always looking for someone who will pay back, someone who will invest, and someone who will do the intervention. So the payback in this case is the academic institutions, because they're losing twice. Once they're losing the money from the students' tuition, and then they lose the funding from government, because the way the funding works in Israel, you get more funding if you get more students to complete their degree. So we saw that, and then we looked, in our case, the investment, and then the intervention, social finance, and also a specific organization called Aluma that is actually doing the intervention model. Now, the big issue I can tell you in building this social impact bond was not getting the investors, was getting the academic institutions on board. Even though it was very clear at the beginning, it starts in the fact that nobody knows how much retention, how much dropout rates they have. And we did this whole work of, proving to them how much money they're losing. And still it was very difficult to take the jump forward. Eventually, we looked at computer science, where over 30% will drop out. And we began a pilot with 600 students. It's 3 cohorts and 100 students in each one of 2 institutions. We began with Haifa University and with the academic college in Tel Aviv. Raised 8 million shekels, and the process is 8 years. We're now somewhere in the middle. We're in our 5th year, actually, of this whole this whole process, but we already have results which I want to share with you. Basically, the idea is pretty simple. It's a program that takes 100 students, all the students that begin studying computer science, and does an intervention that has to do with many of the things that we know already and we knew before, the academic assistance, financial support, everything which is the most important, that has to do with motivation and self-confidence and effective learning habits, Hebrew improvement. In Haifa University, by the way, when we started, 50% of the cohort, 45% of the cohort were from the Arab community. Today, it's already 70% of the cohort from the Arab community in Haifa University. So suddenly Hebrew became a big issue. So we did a whole bunch of interventions that had to do with the specific needs of these specific students. And most importantly, it's knowing what the status of each student is. So I'm not going to go deep into the intervention, but just to say that there was a model. Eventually, we were able to get these two academic institutions to agree to a pay for success model, where of course we brought in half of the investment as the foundation and another half from other investors. I should say, and maybe this is very important, as a foundation, we didn't look at it as an investment to begin with. We thought we're going to put in philanthropic money into this, and only eventually did we decide to actually treat it as a regular investment, and it's from the other pocket, from the investment pocket. So looking today at where we are in terms of the results of this social impact bond, we didn't know what the results are going to be. So today we're already looking at, in the first cohort, 31% was the benchmark, which is the dropout rates. We haven't finished yet, but we're looking today at dropout rates that will end. You can see from one cohort to the other that we're improving. So the first cohort is going to end around 24% dropout rates, second cohort around 19, and then 17. So you can see improving from one cohort to the other, we're getting better results. Eventually, reducing dropout rates by over 30%. And if you look in terms of amount of people, we're looking from the 600, at least between 50 to 80 students we know today that were not supposed to finish their academic studies in computer science, are going to finish their academic studies in computer science, are going to easily go into the high-tech market in Israel because there's a huge demand from the market. So we're looking at a field where there's huge demand from the market. And obviously it's going to impact on the national level beyond these students. So we know today the results are even better than we originally anticipated. And what we did as a result of that is just recently actually made another investment in a second social impact bond that does exactly the same thing. We learned from the first investment that, for instance, in Haifa University, for a whole bunch of reasons I won't go into right now, the results were better than they were in the college in Tel Aviv. So our second impact bond is going to be only in Haifa. We know that we are learning from year to year, so we're going to get better results. So we now have a much better chance. At this stage, the expected IRR is 4%. So we're looking at a 4% IRR on something that, again, in the beginning, we had no idea if we're going to succeed in or not. Over 50% of the initial investment has been returned. So we have about 3 years down the line, and we're now beginning a second investment, which we know is going to get better because it's only in Haifa University, and it's after we've done the learning and improving from 1 year to the other. So that's basically the model. And I'm happy to say today what I couldn't say several years ago. It's working, and if we can imagine now with COVID-19, with us knowing that dropout rates are going to increase dramatically all over the world and in Israel as well. If we were able to do something on a national level, we'd be able to look at around 10,000 students completing the year, which were not completing it otherwise.
Thank you, Elli. That's fantastic. And it's awesome to see, you know, as some of the SIBs have a longer tenure, the progress year to year. What sort of changes in the intervention do you attribute that progress to?
Oh, okay. So the first year, we weren't aware, for instance, the example that I gave in Haifa, we weren't aware that the Arab community, the issue of Hebrew would even be part of the intervention. One of the things that we've changed, so we put in Hebrew studies. Another thing that we saw in the first year was that the one-on-one intervention was much more effective than classes. So we did a whole mentorship program, which only started in the second year. The university itself, I think that was a big, and if there's a key success factor at the end of the day, it's the champion in the university. We didn't have that in the first year, especially not in the college in Tel Aviv. And the second year, we had a head of faculty that was, you know, willing to sit one-on-one with students, which didn't happen earlier. So we suddenly saw the numbers changing. So there's a whole bunch of things that we can actually see that was the improvement from year to year.
That's great. Other questions for Elli?
Hi, Elli. Shakoch. So I wanted to, you talked about the 4% IRR, but I'm wondering about how much did the university itself save? Because you said that that's going to be one of their motivators, that they're going to save a lot of money that they would have lost. Or how much did they gain because of the fact that they completed? Is it just that they made up what they would have lost? In other words, is there a number or something that shows that this was worthwhile for other universities to join if they could find a champion? Thanks.
The university, the way the numbers worked, the university will save the full tuition being paid by the student. So the money that the university gained from government is equivalent to the cost of the program, and the 10,000 shekels per student per year is what the university gains. So if we're looking at, you know, 50 to 80 students right now, which are going to be completing this, then you can see on a year it's going to be close to $1 million shekels a year for the university.
Thank you. I'm here. We have a few more questions. We also cajoled our speakers into sticking around for another 10-15 minutes or so, so that we can continue the conversation. So tomorrow was kind enough to, we can do breakout rooms or, you know, stay and have one big room depending on what people want to discuss. But before we move into that, just willing to thank everyone for coming and for being with us. Next, I think August 22nd is the next call. Tomorrow we'll be sending out information on that. And my sincere gratitude to Cintra and Elli and for Josh for sharing your impact investing journey with us tonight or this morning.
Thank you
Tamar,
so much.
what's the best way?
Thank you so much, Vanessa, and thank you to all of our speakers. We'll stick around for a bit, and I can either put people into different breakout rooms if you want to discuss, you know, dive deeper with each other into certain issues, or we can stay in one big room for a bit and continue to ask our speakers questions or ask each other questions. This is just really a time to continue the networking and learning together as a group. And yeah, like Vanessa said, we're going to have another one in August. It's actually Wednesday, August 19th. And I will be sending more information to all of you closer to the date, and probably by next week and the next week or two, that will confirm all the speakers and give you the registration information. So thank you again for joining, and thank you, Vanessa, for facilitating this.
My pleasure. Elli, we had a question from Doug and from Beth Cyril about the total size of the SIB and what the Edmond Rothschild's investment was.
The total size of the SIB was 8 million shekels, and we invested 50%. And the other investors were Bank Leumi and And I think that's it. Yeah. No, someone else that I'm missing right now.
I'll just say that a few people have asked me for information on the Atlanta water bond. I'm going to pull that together. You can, I got some of your emails, but if you want to just email me at cintrapollack@me.com, or I'll put it in the chat, my email address, so you guys can contact me with any questions you have.
Oh, thanks, Cintra. And also, if people did not see in the chat, Beth Cyril had sent a link to an article on Jewish values and CDFIs. So I'll repaste that at the bottom in case people didn't see it. Doug, the suspense is killing us.
Yeah.
I know. Everybody's like, oh crap, he's gonna. Okay, so first for Elli, and then to Josh, and if somebody has another one for Josh, or you can jump on too. So for Elli, one of the goals, here in the United States, we have two groups that focus on social impact bonds. They both do the same thing, like Social Finance Israel, but they have different missions. One is to introduce the capital markets to social impact. The other one is focused on changing the way the government procures services. So the question for you on the SIB in Israel is, are you hoping that the information on this will get out such that universities will put their own money into this and have their own IRR of 4%? Because for them, they're saving money, and that could be a virtuous cycle they do on their own. And I'll just put my question up for Josh afterwards, and that is, with the environmental, social, and governance under a lot of scrutiny right now in terms of the definition, the question for Josh would be, how does the C-note determine what ES and G are for them? So, but Elli, do you want to start, and then we'll...
Sure, exactly that. That's exactly the expectation, and that's exactly where we're pushing. We had a meeting just this week, actually, with the president of Haifa University, discussing exactly that. You can be your own investor, and you can make the money. Why do we need to make the money? Now we've proven the success. We've proven that you save money. We've got the model. The NGO that does it, you could pay the NGO. You don't need us. You don't need social finance. Pay the NGO and save the money. So right now they're actually discussing it. We've got pretty positive vibes in this in the last meeting that we had with the president of Haifa University. So I hope we'll have good news here, because that would be a great exit to this initiative. But that exactly is where it needs to go.
Doug, so your question, just to make sure I understand, is in light of the DOL's latest comments on ESG, how should we think about C-note?
Well, no, so much. So I'm just gonna, forget about the latest information about ESG and whether pension funds can or can't. I still think that it's a smart thing. It actually can potentially reduce overall risk to a portfolio regardless. But no, the question is, as C-note says, that it's providing access to fixed income, environmental, social, and governance investments. How does C-note define ESG investments and materiality?
Yeah, that's a great question, Doug. And I think there's how they think about it, but then there's why does it say ESG in the first place? One thing to recall about the marketplace is it's largely uneducated on the nuances between impact investment product, ESG, SRI, et cetera, et cetera. So because they're focused on institutions, many of them put impact in the bucket of ESG.
That's right.
So for them, they recognize they're an impact investment and not so much a risk overlaid investment product. But to the extent that they are ESG from a private markets perspective, it's really on a number of different levels. So they've got a great deal of customization to their technology beyond the off-the-shelf products. So for those that are particularly concerned about the environment and their fixed income exposure and promoting or degrading it, then you can focus your investments via C-note on the environmental challenges we face. And from a social perspective, deal with everything from alleviating poverty to racial inequity to, quite frankly, anything else that would be, from a corporate boardroom perspective, something they worry about from a human capital lens. So you can kind of match as you will in that respect. They have strong governance as an institution in C-Note, and the way they have to comply and the way and the people they have on their board and so on and so forth. That's all to ensure fiduciary, like they can align with any fiduciary model. But their products, I personally wouldn't categorize as ESG products. They're impact investment products.
I got it. That's wonderful. Actually, that, to me anyways, strengthens them a bit in that. So if a client says, look, this is what's important to me, and then they, you know, can source those things and so on, that's great. As opposed to, I want ESG fixed income, I don't care where it is. Well, C-Note probably may not be the right place for you.
So yes and no. It depends
what you're talking about.
The broader product offering setting. So for instance, you know, our value add as a VC is actually helping them on the wealth management side of the house. Okay. And some of the wealth managers that we are speaking to had structured a partnership with Ethic. And Ethic is a sustainable investment, basically separately managed account platform where advisors can basically use their technology to ensure that they have the ESG exposures that they want. Gotcha. But the role that C-Note plays there is none of that is actually impactful, and the impact reporting is really limited to certain very high level risks. C-Note's products can actually not only help you think through the impact perspective, but can also help you think through some of the risks within those issuances. So the question is also, like, how do you ensure that the CDFIs that you're funding are the right CDFIs to fund? Because if you're going through the off-the-shelf products, you're not going to a single CDFI. You're part of a pool of issuances that actually gets a diversity of CDFIs. So you're reducing your risk by not being exposed to a single CDFI, but rather a group that have various performance metrics. So the diligence there also speaks to the actual risks embedded into the product set.
Nice. Okay. That's really helpful. Thank you for that.
So I used to run a community development financial institution in my prior life before I came to the
just CDFI. PCV is like one of the CDFIs in the country.
Well, but we're actually not a depository institution, so C-Note wouldn't really be investing so much in us. But at any rate, the reason that I'm trying to get the Jewish Community Foundation to look at C-Note, particularly their fully insured products, because our short-term pool for our donors has to be fully, I mean, it takes no risk. It's a short-term pool, needs the FDIC and or the credit union, federal credit union insurance. And the piece that I put in the chat, which I would encourage all of you to look at and hopefully share, really looks at investing in CDFIs as a way to support the Black community and eradicate the wealth gap and the income gap in the United States, because an overwhelming percentage of CDFI lending from the depository institutions that lend out, they lend to people of color in ways that the mainstream banking community will not still. And access to capital is probably the single most important thing that's going to eliminate the wealth or reduce the wealth gap in the United States, which we've clearly seen, that the institutional racism in our economy, it gets eradicated by access to capital. And that is really what at least what the depository CDFIs, and 2 seconds more background, there are about 1,100 community development financial institutions in the United States. About half of them are either banks, thrifts, or credit unions, depository institutions. The other halves are loan funds, venture capital funds, et cetera. C-Note is really looking, as I understand it, at the depository institutions.
The lender. So yes, depositories, but it's mostly the lenders specifically.
Yeah. Well, most of the depository institutions lend out. They're banks and credit unions.
Exactly.
This is really a time from an impact standpoint, particularly where you can pick a product where there's zero risk. This is really the time in our country, in the United States, to be looking at this and building the infrastructure of banking in minority communities. So I would really appreciate it if you all, I put that in the context of Jewish values in the piece that I wrote, that was recently published, and I would really appreciate it if you all would read it, and if you're comfortable sharing it, that would be awesome. Thank you. I could go on CDFIs for a long time, but I'll be quiet.
Let me echo some of Beth's sentiments quickly from the Jewish values perspective. I'm going to put my son of a rabbi hat on quickly and say, from a Talmudic perspective, the ultimate way to help someone is to help someone help themselves anonymously. And Sino creates that degrees of separation that enables you to do that. And quite frankly, it doesn't hurt. This is not Talmudic. It doesn't hurt that you're getting a return on doing that.
Right. It's Maimonides' highest level of tzedakah.
Exactly.
Flat out.
Any other questions or anything else anybody wants to share?
Tamara, before we finish, let me just say, let me just thank you all for being here. I am kind of stepping in for Vanessa here to thank you for doing this work. Cintra, Elli, Josh, so appreciate you guys as speakers. And all of you that stayed late too. One of the things that, as the committee was putting this together, mostly, if not singularly led by Vanessa, the hope was that these could be virtual gatherings afterward, so we could like hang together and ask these kind of informal questions, even if it's like, you know, Beth and I just talked yesterday because she and I were on one of these last month. So, and I haven't seen Josh in too long, and Elli is one of my favorite guys to visit in Israel. So just even to hang out afterwards and to catch up and to talk, that's what we're hoping this is. So if you sign up again, hopefully you'll be able to stay, you'll continue to stay, and we'll make good use of this. Also, if you have ideas on how to make this better, let Tamara know, and we'll try to incorporate it. Thank you all so much. Really appreciate it.
Thank you so much.
Yeah.
All right.
Thank you all.
So,
Thank you all, and I look forward to hopefully seeing all of you again in August, and to be continued as we build up our community here at JFN and Impact Investing. Have a great day, everybody. Stay well.